Hey everyone, welcome back to Earnings Call. I'm Jeffrey Beamer. I'm the Senior Investment Strategist over at ewotrader.com. If you've seen our show, you know that we don't just talk about stocks each and every week. We talk about how to profit from company earnings, specifically when earnings cycles start like this week. All right. So this week is the week of July 13th, and we're going to kick off the second quarter of earnings season with the spotlight on large financial institutions. Now, notable also are some semiconductors, healthcare, streaming media. They also have reports, and we're talking the big companies here. But let's not underestimate the results, and guidance from all of these market leaders will help set the tone for the next several weeks ahead. Okay, so from an options perspective, the focus will really be on our quiet list. I'll describe what that is in just a moment. That's with all of the bank names, bank and financials, including two big insurance giants. And also note, we have one airline on the list, which is interesting after Delta gave results on Friday, and they beat both on earnings and revenue. So UAL will be interesting. So we're going to go through the whole list, and we're going to do it starting right now. All right, let me clarify what the whole list is, okay? There are about 85 companies declaring earnings this week. We narrow them down to some of the better candidates for our how we trade through earnings, okay? And we have two types of strategies that we use. We use one for volatile stocks, okay? Actually, two strategies, straddles and strangles. And then we have a quiet list. Stocks that move single digits, like 4%, 5%, 6% through earnings. Those are on our quiet list. So on the left-hand side of the sheet, you see Aehr Test Systems, and you see UnitedHealth Group. Those are our potential breakout stocks for this week. And then on the right-hand side, we have the banks and a few other names. Okay, notice Netflix, notice Progressive, notice Travelers, some of the, not all of them are banks, but man, most of the banks. And I don't even have all the banks listed, but these are some of the better candidates. That's why. All right. So, just to give you a little heads up, Wells Fargo, Bank of America, they're not on our list, but they all declare this week. All right. So bunch of names, Truist and Fifth Third Bank, and just all the big names, but we highlight the best ones, okay? So let's begin with, really our massive list this week, and that is on the quiet side, all right? Let me give you an example of what a quiet stock looks like, okay? Now, this is a chart of McDonald's. McDonald's does not have earnings this week, but I highlight this as a great example. I have the earnings of McDonald's highlighted with the ellipse and the red vertical line. And this stock is a single-digit mover through each and every earnings cycle, okay? It will move 4, 5, 6%, really no more than that, no more than usually 4 or 5% through earnings. And we have a specific strategy that we trade these. And my favorite is what's called an iron condor, okay? And this is a two vertical spreads combined together, a bear call spread and a bull put spread. An iron condor is a common strategy. Every broker that trades options knows how to trade an iron condor. They have that strategy usually as a default on their trading platforms. So this is not some esoteric, way out there type of strategy. This is, yes, it's a little complex, but it's a basic, what I would call basic to intermediate type of strategy, and kind of on the complex side, as I mentioned, but once you get the concept, it's really easy. Okay. We do this at a credit, and I like doing this because if we're right and our trade does what we want it to do, we don't have to trade out of it, meaning we don't have to exit. We can just let it expire worthless and keep the entire credit that we received. Okay. So let's get to that list. All right. So this is our quiet list, and you can see that some of the highlighted companies here are all the big names, and we have Citi to Goldman Sachs to look down the list. You see Netflix there. So streaming services. We have some healthcare companies, specifically ISRG, that is on this list. But let's get to the charts because that's where the rubber meets the road and we really kind of see how these things are traded. We're going to begin with Citigroup. Okay, nothing's going to happen on Monday. Okay, and let me just mention, we normally record this show on Mondays. Okay, but we are recording it on Friday, July 10th, because of some scheduling conflicts. Normally, we do it at the beginning of every week, but this is such an important week that we wanted to make sure that we didn't skip it because this is the beginning of the new earnings season. So prices you'll see are reflective of today, which is Friday, July 10th, and just wanted to make note of that. Okay, so Citigroup will have earnings on Tuesday. Nothing happens on Monday. Okay, well, there's two earnings: a First Bank, which is medium-sized bank, and a company called Aerojet didn't even make our list. Okay, we're not even considered trading those. Okay, but we begin with Tuesday. All right, Tuesday morning, Citigroup has a average expected move of 5%. This is a $140 stock. We do like how this kind of pricing, anything really $50 and above, all the way up to about $1,000. We like trading these iron condors on, and usually the big liquid companies have a variety of strike prices that we can really zero in a great opportunity. Okay, so Citi and then JPMorgan. I mean, we start off Tuesday morning, tons of banks. Okay, JPMorgan declares Tuesday morning before market open. The average expected move here is 4%. This is one of my favorites to trade, JPMorgan. Okay. It always makes our list. All right. At a $337 stock, you're going to see a lot of these financial stocks have had a good run. They're one of the leading sectors right now, which is kind of surprising to some people. Also, Tuesday morning will be Goldman Sachs. Now, this is what I'm talking about. This is a $1,000 stock. Okay. However, there are a variety of strike prices that we can usually keep our risk low. Okay, because usually when you get up to stocks like this that are priced around $1,000 a share, they have strike prices every $10. But there are some companies, especially the bigger ones with more volume, they will have strike prices, every $5 or some even $2.50 wide. Okay, so that is why Goldman's on our list. It is one of my favorites. It's very consistent. They have an average expected move of around 4%. And you're going to see this pretty consistent with all the banks. They're very quiet. They're so big with these big banks that they just don't move very much. Now, here's an example on the other end of the spectrum. This is Bank of America. As I mentioned, they also will declare actually on Wednesday for Bank of America. Okay. Wednesday, July. Well, let's just confirm that because I have a wrong date on there. Let me just verify that. Okay. Bank of America is on Tuesday, the 14th, not Wednesday. I knew that it was caught my error there. Let me just change that because we want to be accurate in our data. All right. So Tuesday, July 14th, before market open. Now, Bank of America is a $60 stock. Okay. So option prices here might not be exactly where we want them, and we might have to get a little closer to the current price of the stock to get a decent trade-off, and I don't like doing that. In other words, if I have to come in and set my strike prices at just 4% away from the current price, and the average move is 4%, that's not a good trade for me, okay? And I like maybe going out to 8% or 9% if I can. And that's where premium on a stock like this will get a little thin. It will be, there will be a lot more premium on a stock like Goldman Sachs when you're 10% away from the current price of the stock. It's just kind of how things work. Okay. So moving on, we have Wells Fargo. Okay. Wells Fargo. And again, my error here, we might have to just correct this one too, because I know all these go on Tuesday. Look at that. I was just cooking through these, setting these up, and they also declare on Tuesday, July 14th, before market open. The average move here on Wells Fargo is 5%. Now, one thing to note here is you can see the move in the stock. Okay. You can see that this thing has been in a nice uptrend. We typically are not worried about the overall trend of a stock. Okay. Because we are trading these just within the couple of days in or around the earnings event itself. Okay. These are not long dated option trades that expire a month from now. No, we are coming in and we are trading pretty short term on these. Okay. So they have earnings on Tuesday, and they have an average move on Wells Fargo of about 5%. Now we move to Wednesday, okay? Because Morgan Stanley does declare on Wednesday, July 15th in the morning before market open. These banks do love announcing in the morning, don't they? Okay? And you can see big uptrend. This stock, just on what you can see here, has gone from a low in the around 155 to up to $222 in about 4 months. Okay, so very strong move for Morgan Stanley. This is a good stock. Earnings Wednesday before market open, yet their average move here through earnings is just about 4%. Okay, just pretty quiet, even though the stock has had a great return, especially since April. Okay, we're not really concerned with that, just concerned with what happens through earnings. Changing gears here for a moment, we have Johnson & Johnson. Okay, another sector, but still a quiet stock. They will announce results Wednesday, July 15th, before market open. The average move here is about 4%. So you can see many of these are right in the middle of our quiet, anything from 1% to 9% is our window for quiet stocks. And most of these are around 4 or 5%. They're just very consistent. Now we go over to an insurer. Okay, Progressive. Now, this one, there's a little confusion out there right now about the date, but I have several sources that putting it on Wednesday, July 15th. All right, so we would just verify that before market open, I believe, is when it's going to announce results. But the key thing here is the average expected move. The average move here is just 4%. This is a $230 stock. Love stocks that are $100, $200, $300, $400. That's really the heart of our sweet spot for trading these. Love trading iron condors on these quiet giants. Okay, love trading them. Switching over to the airlines for just a moment, we have United Airlines. They will declare Wednesday, July 15th, after market close. Yes, we have a couple trade that announce after market close. United Airlines has an average move. Now we kick it up a little bit here. Average expected move is 6% through earnings. Now this is an $125 stock, still up in that sweet zone where I could probably go 10% out of the money. So about a $10 or $12 move above or below the current price, get some decent premium in those options, and initiate an iron condor. We never sell options naked. Okay, meaning yes, we're selling options, but we're also buying further out of the money options, call and put, to protect our margin, protect our risk. Okay, these are limited risk trades. We never trade naked with these. Switching gears to streaming media, okay, the name in that sector is Netflix, and they will declare on Thursday, July 16th, after market close. The average expected move here is 7.5%. Okay, so this is a little bit more volatile. The stock is now a $75 stock after the stock split several months ago, and you can see that Netflix has been selling off. All right, and that might give you an idea of how earnings might go. Okay, but we just don't know, and that's why Iron Condor, we want it to just stay in a range. Okay, and they will announce later in the week. Okay, also towards the end of the week on Thursday, we have State Street. Now, State Street will do it in the morning. Okay, these banks love the morning. The average expected move here is just 4%. And again, another stock that is just really running. Down here at $120. Now it's $180, but still great price area where we can get decent pricing on our options. for an Iron Condor going through the earnings event. Okay. Now, a surgical company, this stock used to be really volatile and not so much anymore. This is Intuitive Surgical, ISRG. They will announce on Thursday after market close. The average expected move here is about 6%. It's still a $400 stock, though. And we can easily get off an Iron Condor and expect a very quiet earnings for Intuitive Surgical. Okay. Because traditionally now they are pretty quiet. And this is not uncommon for stocks. You know, we have companies that we see that have been really quiet for a long time are all of a sudden now volatile, and volatile stocks that are now quiet. They all go through cycles. ISRG is just in one of those quiet cycles. All right. Now, the last stock on our quiet list for this week is Travelers. Now, Travelers will declare on Friday morning. That will be July 17th before market open. The average move here, and again, these average move numbers are just through the earnings announcement. Okay, 5%. 5% for Travelers. And again, at a $340 strike price, one that I will definitely be researching and seeing if I can get the pricing I need for an Iron Condor that is worth executing. All right. So that is our quiet list for this week. It is extensive, and there are names that are, probably pretty decent that I did not even mention. Okay. One that I thought I had here as an example, I don't see it, is GE Aerospace. Okay. Let's just do an honorable mention here. They will declare on Thursday before market open, and they have an average move of just 6%. So you see, they didn't make my list here, but I do know that they have earnings on Thursday before market open, and GE is another good candidate. I'll just make sure GE gets on here because this is a great stock that I love, working with, and we'll do that on put that up there on Thursday. Okay, so that's our quiet list for this week. Now we get to the ones that everybody loves, which are the volatile ones. All right, the breakout list. Now, what are these stocks? Okay, these are companies that are extremely volatile through earnings, meaning they move double digits through earnings on average, 12%, 15%, 18%. Each and every earnings cycle. A good candidate here, as an example, is Akamai. Akamai does not have earnings next week. Okay, it's not on the list. But when it does have earnings, this is a volatile stock. All right, and sometimes we can get a good trade off on Akamai. Sometimes we can't. We trade straddles and strangles with these. We want the big breakout. We want the stock to move. All right. And so we trade a straddle or strangle. Yes, implied volatility is going to be a little high on these. And yes, we are paying up for that opportunity. But what we're looking for is that bigger breakout than average. Okay. So we have two stocks only this week on our breakout list. And those happen to be Aehr or AEHR Test Systems and United. Okay. So let's take a look at the chart. And we'll start with AEHR is the symbol here, Aehr Test Systems. They will announce earnings on July 14th after market close, so Tuesday night, okay? And the average expected move here is 14%, all right? Now, as you can see, this stock is on a bit of a downtrend. It has been volatile. Believe it or not, this move back here is about a 12% move, okay? This thing will move consistently. Back here when this was a $20 stock, yes, this is about a 12% move also after earnings. It doesn't look like it given now look at the volatility. The daily volatility in this stock is just amazing compared to what it once was. The unfortunate part is option market makers, because of this recent volatility, historical, statistical, those two words are interchangeable. Because of what we see here on the chart, which is historical volatility, they usually will price up the options and make it unaffordable to trade this stock. I usually like to get, trade a straddle or strangle around the 10% number. meaning it needs a 10% move when historically it moves an average of 14%. That gives me an edge. Do we find those? Yes, we do. Okay. Yes, we do. They don't always move the expected move, and sometimes they move more than the expected move. Okay. So that is Air Test Systems. And then the United Group. Okay. UnitedHealth Group. Now, this one is a $424 stock. The expected average move here is right at 10%. But here's the thing. This would be for higher dollar accounts. Okay. A trade here will be usually around $4,000, $3,000 or $4,000 for a straddle or strangle. And that is not for smaller accounts. But this is a double digit mover, one that people might not think is, but historically it's right in that 10 to 11% historical average move range. And you can see the gap on the last earnings announcement there. That gap was, let me just verify, that was a that was a 7% move right here that had follow through to it. Okay. So when you total these next few days, because we're not doing them with 1 day to expiration. Okay. We add a little time to these. This is a pretty good move, but you can see it does tend to gap around a little bit. That one was not quite the estimated move, but it will move. So keep an eye out for UNH. Okay. I'd be very careful of trading an iron condor on this, because you can probably trade one and get it really wide break evens, but there's a reason for that. Okay. And that's just a cautionary tale. All right. So that is our list for this week. We zero it down from 85 to just a handful that you see here. Okay. Each and every week we do this. And as I mentioned, normally we do these midday in the trading day on a Monday. We're coming to you live on a Friday this week because of travel. So with that, we can take a look at how our trade from last week did. And then I have a new trade for you this week. Okay. So let's take a look. Last week we did a strangle on Levi Strauss. Now, Levi's has an average move that is double digits, okay? And we expected some volatility on the stock going into earnings. So how is this doing? How did it do after earnings? Well, honestly, it disappointed a little bit. Dropped about 6% on earnings and then reversed, which is one of the worst things that can happen to a straddle or strangle, is when you get that gap down move. Sometimes the company or the stock will continue to sell off. It'll gap down 6%, close down maybe 11% at the end of the day. Strong downward move, but sometimes what happens here happens, okay? Where the stock gaps down and then rallies up through the end of the day. The stock ended up closing down by 2%. Today, you see a little wick on the bottom of the candle. It tried to sell off, but now it's up almost 4% on the day. And that's why I went ahead and we're going to stay with the trade. We did not exit. We're going to stay with the trade to see if we get a couple of days in a row of 4% moves, okay, we could have a profitable trade. And that's why we're sticking with this, holding it through the weekend and looking at it next week. All right. So not a winning trade right now, but it's still an open trade. All right. So that is our trade from last week. And what do I have for you this week? Well, as much as I love JPMorgan, really the value came in with Morgan Stanley. Okay. So Morgan Stanley is our trade of the week this week. This is an iron condor on Morgan Stanley. You can see the horizontal blue lines there that kind of bracket the price, the current price of the stock. And you can see that we've centered the iron condor. We just want to stay in that range through the earnings event, which is in the middle of the week next week. And this was an iron condor on Morgan Stanley. Now, we do give you the opportunity to get these trade alerts live, okay, when I send them out through our earnings club offering, okay? You would not believe the price of this. We're going to include a link in the bottom underneath the video. We'll include a link to explore the earnings club. It's a trade a week. Okay. Every trade that we do here on the show, we actually send an email out and also a text alert to you each and every week. Like Levi's today, I added commentary, sent the commentary out first thing this morning so that traders know, hey, we're holding on to this. We're not going to exit it today. We're holding it into next week. They know exactly what we're doing and how we trade it, what the exact strike prices are, what the exact prices are. It all comes to you through email and through a text alert. So be sure and take a look at that link that we'll include at the bottom of the video. So that is our show for this week. Beginning of earnings season, it gets cranked up from here. Okay. The following weeks, the numbers continue to build till we get hot and heavy into earnings season. The banks lead us off, and it's always exciting. And we'll be watching closely next week as they all announce, and the big ones on Tuesday morning. Okay. So everyone have a great trading week, and I will talk to you again soon. Take care.